The new IPO on the block, Palantir Technologies, is expected to start trading on September 29 on the New York Stock Exchange. The ticker symbol would be PLTR. In this video, we will see that Palantir Technologies is going public using a direct listing and not an IPO. I will explain the difference. We will then take a look at a brief history of the company, which has a high-profile founder, Mr. Peter Thiel, who was the very first outside investor in Facebook. We will then take a look at Palantir's business and products. We will also take a look at the advantages and the risks of investing in the stock. Then we will try to come up with a valuation and an IPO price per share. Hi, I'm Arshad Ahmed. I'm a founder of DIYstockpicker.com, an investment portal dedicated to help investors in finding winning strategies to pick stocks. This video is only for informational purposes and should not be taken as a recommendation to buy or sell securities mentioned in this video. Palantir Technologies was founded in 2003. The company specializes in big data analytics. The company was co-founded by Peter Thiel. Mr. Thiel is also the co-founder of PayPal, and he was the very first outside investor in Facebook. His $500K early investment in Facebook fetched him $1 billion when he sold off in 2012. Palantir started building software for the intelligence community in the United States to assist in counterterrorism investigations and operations. They later started building software for the commercial sector. According to their prospects, the total addressable market across the commercial and government sectors is $119 billion. The market for the government sector is $63 billion and the market for the commercial sector is $56 billion. They are also investing a lot in their sales force, thereby tapping into a whole new customer base. Palantir Technologies is going public using a direct listing and not a traditional IPO, and here is the difference. In a traditional IPO, new blocks of shares are created. An underwriter then helps through the listing process, navigating the regulatory requirements, setting an IPO price for the shares, and then buying all the available shares from the company. The underwriter then sells these shares through their distribution network to mutual funds, pension funds, investment banks, and insurance companies. The company executives and the underwriter also conduct a roadshow prior to the IPO to drum up support among the institutional investors. The underwriter then takes a commission of 3 to 8% of the IPO proceeds. In a direct listing, registered shareholders will be selling their shares. These shareholders are the existing investors, promoters, and the employees. No new shares are created. There are no lockout periods. Since there is no middleman, which is the underwriter involved, there are no underwriting fees associated with a direct listing. The company also will not be raising any capital since no new shares are created. 3 classes of shares focusing on founder-led governance, with founders having most of the voting rights. Class A shares with 1 vote per share. 496 million shares held by 2,794 stockholders. Class B shares with 10 votes per share. 1.09 billion shares held by 738 stockholders. Class F shares are held by a voting trust that will control up to 50% of the voting power. 1 billion shares held by 1 stockholder. And there is no preferred stock. Palantir Technologies have 2 main products, Palantir Gotham and Palantir Foundry. Gotham was constructed for analysts at defense and intelligence agencies. It enables users to identify patterns hidden deep within datasets. The input sources are signals from intelligence sources, reports from confidential informants. These patterns were used to map networks of insurgents and makers of roadside bombs. Foundry transforms the ways organizations operate by creating a central operating system for their data. Individual users can integrate and analyze the data they need in one place. Foundry is used by many commercial enterprises as well as the government customers. Here is a look at their financials. In 2018, Palantir had a revenue of $595 million and in 2019, a revenue of $742 million. A net loss of $567 million in 2018 and $580 million in 2019. Cash and cash equivalents of around $1.5 billion as of June 30, 2020. The advantages are: the product has a wide moat, it has a high barrier of entry and serves a niche market, good working capital on hand to conduct operations for the next 3 to 5 years, revenue growing at a great rate of 49% year over year. Here are the risks involved in the business. There are no earnings so far for the business, though the company is said to be profitable this year. The company is also subjected to a lot of regulations like data protection laws, international laws, etc. A big chunk of the revenue is from the government sector. The government contracts are subjected to challenges and risks based on the economic health. The leadership does not work with the Chinese government due to privacy concerns. That takes away a big chunk of the market for the product. There is a risk for stock dilution. A huge sale of Class A stock is being expected of the registered shareholders. Also, a lot of stock options are getting vested at the IPO and those may also be sold. Palantir's products are very complex and they take a lot of time to get them up and running at any customer base. So here is the valuation and the IPO price. Snowflake recently had its IPO and the stock price surged as high as 100 times its revenue. Palantir Technologies may not generate the same level of hype, but if you look at the exuberance the investors have for technology stocks, it may be at least 50 times the revenue. This values the company around $37 billion. Given that there are about 2.5 billion shares outstanding, that puts the IPO price between $15 and $17 per share. I hope you liked this video. Please subscribe to my channel and stay tuned. I will be releasing videos weekly with more information about upcoming stocks. Stay tuned.